Hey, it's Clay at claytrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is a portion of the Inner Circle subscription that I offer at the site. Just give you an idea of kind of what goes on behind the scenes and what you would expect to get from this portion of the subscription service. Before I do get started, though, a couple of quick disclosures. First off, I'm not trying to imply that every single alert that's sent out is a winner and that everything is just perfect all the time. That's just not the reality of the market. In fact, in this video, you'll see quite the opposite in many senses. With that being said, and what I want to definitely illustrate in this review is that losses do happen. I don't care what somebody says or what somebody portrays. I assure you, losing is just part of trading. But there's a reason why you need to be so focused on risk management, risk control, and just being quote unquote a good loser, because while losing does happen, winning also happens. So when those winning trades come along, that is going to ensure, assuming once more that you're focused on risk management and all that stuff, but when the winners come along, that'll keep your overall account healthy in the long run. Second point to bring about is just that we are going back a little bit into history. We're going to be looking at the week from 12/10 of 18. Clay, why are you going so far back? That is a more than fair question for two reasons. First, it's just giving the chart plenty of time to play out so we can see what exactly happened from the alert. And then second, it's a matter of being fair. If you were to pay for something and then the next week you see all that stuff out there for free, I'd imagine you'd feel kind of a little... wait, and I would understand. You would be justified in that feeling. So, and not only to be fair, but like I said, to give everything plenty of time to play out. And then the overarching theme here is going to be more so about why certain tools need to be in your trader tool belt. And when they're not, you really are cutting yourself short, and the opportunity cost that you are costing yourself can be quite high. Before I get into this specific example, to provide a little overarching context, this is when the markets got really nasty back in December, and the bears showed up, and they showed up in a big type of way. So that is the overarching concept. The markets at this point in time are getting absolutely crushed. So you may be thinking, are all these about to be pretty nasty? Well, it depends, and we'll get to that. But so for the first alert that you see here was ticker symbol WIN, and category of is a bounce coming. Had definitely gotten beat down quite a bit, and then you had a couple nice favorable candles right there. So kind of just a question of, hey, is this thing starting to shape up for a bounce? Let's see. Another note, these go out on the weekend, so this is what the chart looked like over the weekend, and then the next candle you'll see will be that Monday. So the newsletter is always sent out over the weekend. That way you have plenty of time all weekend long to put together trade plans, or kind of figure out if you want to try to make anything out of these or not. But this is what it was over the weekend. So the next candle you'll see will be on Monday. So you can see right there, opportunity to get in, and actually did kind of go up a little bit in our favor. And once again, where it opened up, went up again in the favor. Now, I say went up, and if I really want to say like, well, so technically that was a winner, because if you played it perfectly, then you would have still made some money. But that's not really, in all actuality, I mean, maybe somebody would have taken some profits off the table, but this should have been a losing trade, because as you can see right there, it pulled back, and then right there, it pulled back even more. So at that point, people should be out. But the lesson here, and what I want to focus on, is what happens if you're like, nah, I'm going to be undisciplined. I'm going to be undisciplined. Well, let's just see what being undisciplined and not controlling risk would have led to. It went all the way down for a loss of 39%. And if you find yourself saying, but Clay, look, it bounced back up. Let me put it this way. If you are holding something for a drop of 39%, and then making money or breaking even on it, that's not a very good habit to have, to hold something for a 39% drop. My point here is that, what, if you would have just been disciplined and gotten out, where it would have made sense up around that area of the chart, you would have, still taken a loss, but it would have been a controlled loss. And as you'll see as we carry on, that'll come back, and things can be taken care of. Another alert here to focus on was TREX, and again, is there some sort of breakout coming? I could have put this into a technical pattern category, but I mentioned that a nice little wedge had formed right there, and just kind of a question of, hey, what, volume's kicking in, maybe some sort of breakout is getting ready to occur. Let's keep an eye on it. So let's see how this one played out. I forgot to note this, but I realize now we're talking about a $60 stock, but WIN, the previous, was like a $3 stock. And if you've watched my past videos, you've seen me talk about penny stocks, sub-penny stocks, stocks over 100. My point is, hey, Clay, what price range does the newsletter cover? I cover whatever I think is going to give us, the highest probabilities of having success. So if that's a penny stock, so be it. If that's a $100 stock, so be it. You could always use options. But the point being, I don't pay, price is very far down the list of things I pay attention to. I just want to see certain characteristics, to give us a probability of success. So here we have TRX, like I said, over the weekend. So let's see how this one operated on Monday. You can see there was a pullback to the trend line. Now, technically speaking, but I'm not going to base any calculations off this. You could have played it for a little trend line bounce. So it went down there. You could have gotten in right around 60 when it hit that lower trend line. There was another opportunity to kind of play the trend line, good little risk versus reward, and you did get about a $3 bounce there. So technically speaking, you could have. Now, am I saying that everybody would have played it perfectly and known to play this little miniature bounce? Of course not, and I'm not going to base any calculations on that, because you could very well have been thinking, well, good, I got in at the trend line. Now let's see if it can bounce and get a breakout. But maybe taking some profits off the table. That's not unrealistic. But the point is, I'm going to consider this where you got in maybe down around there, or in all actuality, maybe you didn't get in at all. Because if you were looking for a breakout, well, it never even broke out, so you would never have gotten into the trade. But the point being is, even if you got in, sure, you could have taken some profits off, but ultimately you can see that it did roll back over. And if you decided to just get undisciplined, you see that this thing ultimately rolled over for a low of loss of 10.8%, which on a $60 stock, that's quite a bit. And once again, like I said, but Clay, look, it bounced back up. See, if you would have held. Like I said, if you're that disciplined to allow a stock to go basically 11% against you, and then sit there and hope it comes back up, yeah, maybe it worked out in this situation, but that's not a very good habit to be building at all. Now what I want to shift to is another part of the newsletter where I talk about specific setups out there. In particular here, shorting. Now, what is shorting? Well, I have lots of videos on what it is, but in a very, very quick explanation, shorting is a way to make money when prices go down. So if a price goes down, your account value actually goes up. I realize if you've never heard of that, that sounds very bizarre, but that is how it works. Again, when prices go down, you as a trader are actually making money. And then if prices are going up, you as a trader are actually losing money. So the point here being, shorting is a tool that I would say absolutely 100% needs to be in your trading tool belt, because as I've alluded to already, during this context, the market as a whole was getting beat up, and mainly the alerts that we've covered a couple were either no plays, meaning there was just, you never would have gotten in because nothing broke out, or they would have been losing trades as we saw. But keep them disciplined, keep them controlled, and then if you have this factored into your tool belt, this being shorting, as you're about to see, that opens up a world of opportunity. When the markets are getting crushed, there would have actually been plenty of times to not only overcome those losses that maybe you would have taken from the long side, but you would have from the shorts, quote unquote short side, you would have, well, let's just get to these, but short explanation here. Well, where are the charts at, Clay? Well, when it comes to this part, I just give the ticker symbols. Why? Well, because if you take my course that I do offer, and sure, I guess this is a miniature sales plug for it too, but it's just the fact of the matter that if you take this course, then you don't need a chart. You don't need me to annotate anything. You would be able to look at those ticker symbols and say, okay, yeah, yep, I could do that. I could do this. I need to wait for that. And you'll be all set, which illustrates the power of knowledge. When somebody teaches you how to fish, all they kind of do is got to just point to where the fish are over in that part of the lake, and then you go over there and you know how to catch them from that point. So that's kind of what I'm doing here, is I'm pointing out where the fish could potentially be in the lake, and then because the people have taken the course, they will know how to go and catch those fish. So let's first just take a look at a few of these. One final remember, prices going down is a good thing. So there is Monday right there. There is Tuesday. Hangs around a little bit. And then, as I'm sure you're not shocked to see, given the other ones acted this way, down the price went. And that drop there was good for a potential 10.2% move. And yes, it went back up, which is not good for shorts, but that was a 10.2% profit window. Am I saying anybody played it perfectly? No, but great move in the downside direction. And the overarching point is, if you just don't know how to short, or you don't short and you don't have it in your tool belt, this opportunity would not have been available to you. So you are literally cutting down your flexibility as a trader if you don't have the tool of shorting and the ability to short in your trader tool belt. So the next one, CTL, this is what it looked like going into the week. So let's see how this one goes. Remember, prices falling is actually a good thing. It's kind of just hovered around here a little bit. Nothing drastic, though, that would have taken you out of the trade. And you can see right there, again, surprise, surprise, when the markets are getting hammered, this one got hammered too. Got hammered all the way down there to that low for a move of 20.2%. So think about that. We talked about a couple losing trades, but if you had kept those controlled, 3-4%, not letting them expand down to the big percentages that we saw, well, here now we have a chart where, yeah, you could have not only taken those losses and wiped them away, you could have put in your account that much greener. Because, I mean, again, not saying anybody played it perfectly for 20.2%, but even if you played it half right, that's 10%, and that in and of itself could have potentially wiped away both those losses that we already talked about. Final one, WLL. Again, this is what it looked like over the weekend, and we want to see prices fall. So you can see gap down a little bit, bounce back up, and no, I am not doing calculations where, well, you would have shorted it up here, which would make the calculations that much more friendly, and then it rolled over. No, I'm doing calculations as conservative as possible. I'm doing calculations based on this green line down here. Like I said, if I wanted to, I could do calculations from up here, which would make those percentages that you're going to see so much better. But let's keep things on the conservative side. So you're just looking at that green line, and there you go. There is where you decide to go short. So again, 27.50 is where the calculations are being made from. But let's see how this one turned out. Absolute bloodshed, which is good. Remember, we're going short, so that's what you want to see. And that move was good for 33.2%. So think about that, 33.2%. Yeah, we started off with a couple losses, but if you kept them controlled and disciplined, well then, even if you would have just played this one, like I said, half right, that's still 15%. Maybe you got 20% out of it. That's going to, no problem, take care of those losing trades, assuming they were disciplined and controlled. So yeah, two main points here. Keep your losses controlled, keep your losses disciplined, always focus on risk management, and then second, learn how to short. Incorporate short into your trading attack. If you are interested in joining, then you can simply just go to claytrader.com/inner circle, or just go to claytrader.com, and there's an area that's called Inner Circle that you can click on that and learn more about the details. But we just focused here on the Power Profit Scan. There's also a live trading chat room where you can hang out with me and other quality traders, get alerts, watch lists, all that sort of good stuff. And then there is a mobile app too, so it's not like you have to stay chained to your computer or anything. You can stay flexible and stay in touch no matter where you're at. As far as the cost, it is $99 per year, not per month, not per week, not per quarter, per year. If you do the math, it breaks down to $8.25 per month. Or if you want to just break down the math that much more, if you look at it from a per week price basis, $1.90. Literally $1.90 per week. If you can't afford that, then I don't know. I would probably venture to say you probably shouldn't be trading. You should probably be focused more so on other things in your life, such as your personal finances and strengthening up your personal finance situation. If $1.90 per week is going to weigh heavy on your budget, if you even have a budget. But those are the prices. If there are any other questions, let me know down in the comment section. Reach out to me through social media, email, whatever makes your life easiest. I would be happy to help. But yeah, give it a try. I'd like to, I think you'll, as I say, and I'll end here, over the time span of 12 months, I'm more than confident you'll get $99 worth of value.